Let's have a quick look at where the local market is tracking down 0.8% after we saw an easing coming through on Wall Street overnight. And to get more on that and across the technicals, Tony Sycamore from IG joins me. Tony, great to see you. A little bit of a easing then here in what we saw on Wall Street overnight. Does that mean that potentially some of this AI trade is overblown, or what are you seeing?
I think it's definitely overblown, but whether we've seen a top or not remains to be seen. But look, a well-earned breather for US stock markets overnight. I think what we're seeing now is just a little bit of concern with regards to some of these deals which are being announced in the US tech space, Nvidia, OpenAI. We had Oracle and Meta, etc. And it's just how these are actually going to work out in reality. Who's, taking an equity stake in one of your biggest clients isn't really something which has a lot of merits about it. But look, overall, there's also concerns with regards to China. They have told their businesses there to stop buying chips from Nvidia, the specific chips that Nvidia have created for China, and talk of a rival product also emerging in China as well. So there is reasons to be concerned. But at this point of time, all we have here is one night of a sell-off. It hasn't really transcended into anything else at this point of time. And I think we're probably just in a little bit of a holding pattern now until the core PCE inflation data tomorrow night. And then, of course, we have month end. Now, what I will say, we talk about the Elliott wave chart, Jules, quite a lot here. This has now completed a 5-wave advance. The minimum requirement is in place. It's just whether it starts to pull back down towards that 23,000 level, or we see 26,000 first. And I think that's what we need to find out over the next few weeks.
All right, well, let's get to our market, which is taking a breather as well on the back of what we saw from Wall Street, but a very different mix-up when you look at it's really miners and banks. And, this big run-up in gold that I was just talking about with Chris Judd is supportive for our market. But what are we seeing in terms of the technicals?
Look, after that big sell-off we saw in the ASX 200 at the start of September, the ASX 200 has been pinned 1% either side of 8,800. It just hasn't been going with US stock markets for the reasons you mentioned. We don't have that tech exposure. And for me, I still want to see another leg lower for the ASX 200, somewhere down towards that 8,600, possibly a little bit lower. And that gives you a neat 5% pullback into October potentially, which would then be viewed as a buying opportunity, leaning against that orange line there, which is a 200-day moving average. So, for me, the ASX 200 is doing the right thing. It had that fabulous run higher at the start of August, and now we're correcting. And that correction for me has room for a little bit lower.
Okay, we're waiting for inflation data. I know you got to get it back to your desk for that as well. The Aussie dollar, pretty flat. I mean, it was pretty strong last week and now not sort of finding too much support above 66.
This time last week, Jules, we were looking at it at 66.80, up at that 67 cent. It's an area we have targeted for a long, long time. It's a huge level on the weekly charts, and it respected it very, very well. Now we find ourselves back in the middle of a range. Let's say the range, for argument's sake, is 67 cents to 65 cents at this point of time. And again, we're waiting for the inflation data, which you mentioned here in Australia and in the US. It is going to be a big one for month end next week. We also have quarter end. The Aussie has been an outperformer. I'd expect to see the Aussie potentially see some selling as a result of that as well.
Okay, let's get to commodities. So oil, these ongoing geopolitical risks potentially around Ukraine as well, really keeping some support here.
Yeah, so many cross currents for crude oil at the moment. And really, it's summed up perfectly in that chart, Jules. It has been trading in a range. It tested the bottom of the range earlier this week, down around that 61.50 area. It's sprung higher overnight. The top of the range looks very, very secure for the time being. You've got the 66.03 high there, reinforced by the 200-day moving average a little bit higher, up around 66.80-ish. So for me, there's just so many cross currents. One night it's the concerns over the demand side of it, then there's supply concerns. And really at this point of time, crude oil deserves to be where it is, trading in the low 60s. And I suspect that probably continues until we see a catalyst of some significance to push it out of that range.
And I imagine you're joining the chorus of the bulls for gold as well.
It's a hard one to fight, Jules. I mean, it's been we've been speaking about the merits for gold. You've had a number of other people talking about it. But for me, it was a beautiful technical setup at the start of this month. And it is up now 9%. We had this contracting triangle in gold. It broke above there at the start of the month and it hasn't looked back. The only issue we have now is it is overbought on the RSI, as you can see there, for good reasons. I'd probably be tightening up my stop rather than even contemplating going short. It's not something I'm considering. But for people that did take that breakout on the chart there, it was perfect. And probably now just time to tighten that stop up a little bit further and let it ride higher if possible.
And are we seeing a ride higher in digital gold, in Bitcoin?
Digital gold is fascinating. I mean, it has been it's been underperforming. When you look at the assets with which it's usually correlated with, i.e. risk assets, the NASDAQ, gold, which is sometimes a correlation due to its safe haven tendencies, it just hasn't done any of that. Now, there's two schools of thought there. Bitcoin is a junkie for new highs. We need to see new highs. There has been a lack of catalyst for that, like specific reasons for crypto to make new highs since we saw that high in July, which was around crypto week. There was a marginal new high in August, but since then, it's been basically consolidating. Now, for me, that makes absolute sense. The run up from the the early January lows, it has had a fantastic run. And during that period, we've seen a number of corrections. You can see 2 or 3 of them on that chart, and they can take anywhere between weeks and months. After a good run higher, it's quite normal to consolidate. I can see another leg lower down towards 105,000, towards that, potentially down to 100,000. That would be a good buying opportunity in my view, just waiting for that leg lower to unfold.